you read the title, you know what we're going to talk about in this video. In this video, we're going to learn how to see or predict the next ranging market. So let's begin with the video without wasting any of your time. So in this video, I'm going to teach you how to identify when a consolidation might come in the market. And we will also cover the difficult patterns that you might trade in the future, how to read inside a consolidation, and lastly, I'll give you some guides on how to make some few entries because I think I have covered some of them in the previous videos. So let's start with the first one. Here on the first one, you are going to identify how to spot a consolidation before it can happen. The first thing that you need to understand is how to read all of these candlesticks individually. So the first thing that you might even try to see is that if you have a strong bullish candlestick like this one here, and then followed by this slow candlesticks, that means the next move that might come might be strong to the upside. But everything can change prior to this candlestick, because you can clearly see that once we break this high here, that means this setup is completed. You might take it in that way. So for example purposes, if we have an impulse in this way, we have a correction. Once price breaks this high, anything that comes here can still change the market to the downside. That's the easiest way you can try to understand this. So that is why in this situation, we can see that once we broke this high here, price made a huge impulsive candlestick to the upside, and then we change direction, breaking this low here. That is why right now we might expect another correction here to the downside. But this is not the full story on how to identify this kind of candlesticks in the market. It can still be difficult to understand, but we will look onto that when we move on to more examples. So let's look at this one. Here, price is most likely to tell you that the next move might behave in the long run. So here clearly, we can see that we have what we call an impulse to the downside. You can see that we have stronger moves to the downside. These candlesticks to the downside, there are only two here. But when the move to the upside is happening here, price took a longer period of time. So this is what we call a consolidation in the market. This is where the market is very slow. This is where the market is very fast in the side. So to predict this is very, very simple. You have to read price in a simplest format. So once you see a stronger move to the downside or a stronger move to the upside, just know that if the next move comes correctively, we might expect another move to the downside. The same applies on a bullish trend. If we have a correction here, the next move that we might predict is to the upside. The only thing that we need here is this correction here. Once you can spot this one, you will spot this one. And then you will also spot the third wave here in the market. And clearly we can see that right now our prediction will be to the downside. Even if we have only this piece in the market, you will predict this piece to the downside. Let's look at another example. You will clearly understand what I mean. Here we have another move to the downside, and then this is the only candlestick that pushed the market to the downside. But once we push to the upside, there will always be some moves, correction, move, correction, and another move. And clearly by looking at price action, this is why I said price action is always important to look for a change in the market. Here we can clearly see that we are pushing to the downside, but these candlesticks are closing with a bullish candlestick. This is a different story because right now here we can clearly see that we don't have any move that is pushing price to the upside. We only have longer wicks that are being rejected from the upside. This will confirm this bearish candlestick that is an impulse, because we have a correction and a set of price action candlesticks here. That is why right now we can see another move to the downside, confirming our entries. This will be useful when we want to confirm our entries in the market. So basically, you have to look at the first one. You have to look for is impulses, then followed by a correction. The third one, price action. And then the fourth one will be where you are making a confirmation to your entries. And there are a lot of entries in the market that you can do. You can even use your indicators, support and resistance level, your order blocks, and so forth in the market. So basically, here in this situation, we can confirm by using our price action, confirming with this bearish candlestick. which is also a rejection here. That's the only thing that can validate your entry in the market. But don't do this blindly because you have to add your own things. This is my own findings. So let's look at another example here. Here, this one is a little bit challenging because we have a correction, it's moving to the upside, and also we have an impulse. In this situation, we will be expecting the market to push like this, but we are pushing like this. And as I said before, if you see a correction, we have two different corrections here. This one is pushing the market to the upside. This one is pushing the market to the upside. So that means the next move here will be to the downside. This one will be to the upside. That's how you can clearly spot this. This one here is this one. That is why you see this market pushing to the downside very aggressively. This is the GBPUSD currently at the moment. And another thing that I want to point out is that inside this correction here, there will also be some impulses, corrections, impulses and corrections like this. That's how at least you can try to understand this very easily. Let's look at how the market will behave in different patterns. Here in this situation, we can have a move to the upside followed by a manipulation to the high and then followed by this price breaking this low here and then breaking this high. This overall here will be a correction. This will be a bigger correction, but it's very challenging to trade in this kind of situations. The only simplest correction that you can trade or focus on at the moment is the one that, let's say you have a move to the upside, have a correction like this. This is a zigzag correction. This is the one that you should focus on, and then you will look for an entry around these areas using your, maybe let's say your order block or your demand zone or even your supply or resistance levels. It depends on the kind of pattern that you are looking at in the market. So that's the only difficult patterns that you can trade there. I can write them down here. We have this one, and then we have this one, we have this one, we have this one here. There are a lot of patterns. I'll try to put this PDF in the description below. You'll find it on Telegram or even on Discord. Let's move on to how to read inside a correction or a consolidation. Here on this chart, we can clearly see that we have a move to the downside. Price is moving correctively, but when we reach this area, price changed. This one here is still valid, but price changed around this area. If you look closely on this candlestick, it's very impulsive. It's very impulsive. And then we started to correct here, very, very slow. And we see a sign, but without breaking this high. So that means this impulse here inside this correction and inside this bigger correction is still valid. So we have to focus on this one before we can focus on the bigger one, because the market can change like this. I hope you understand what I mean. So even in this situation, you can see that we have we have an impulse, we correct, we move to the upside, but we don't have a correction. We have a sharp move to the downside. That's the only valid reason you might even look for that. And clearly we can see for price action, we are closing bullish and rejecting to the downside. That's the only way you can try to understand this. So let's look at another example before we move on to a real chart. Here, this is the GBPUSD again. If we look closely, before the market can drop, there will be some signs around this area. You can clearly see that we have this move. It's pushing to the downside. We only have two candlesticks, but this side we have red. Look at price action. The wicks are pushing to the downside. This should confirm, and also we have a stronger candlestick here. This should be a confirmation that the market is likely to push to the downside. From starting from this area, there is no candlestick that is looking like this with a longer wick from the upside. It ended around this area. That is why you see a push to the upside. I hope you understand what I mean. Even on this situation, you can clearly see that we are pushing to the downside. That is why you see this strong candlestick. Let's go and look at one last example before we move on. This is another scenario here. We have a correction here, but look at the wicks here. Look at this wicks here. Even around this area, we don't even have a wick at the bottom like this candlestick that I'm demonstrating right now. This doesn't have a wick. This one is having a smaller wick, but the upper wick are very strong. Even this one doesn't have an upper wick and a lower wick, I mean to say. That is why you see this move to the downside. And then we have this one here. That is why you see a move to the upside. That's the only way you can try to understand these things here. They will tell you. And as I said before, that if we have an impulse and then we correct and then we break this high, that means we are completed here. No matter if we have this kind of correction, but that topic is on another video. So let's move on the guides on how to make these entries. So let's move on to a chart. So when I'm doing my backtesting, I like to use this indicator to see my ranges so that I can see where the market is likely consolidating most of the time. I don't use it only blindly because I have to confirm with price action so that I can at least try to understand. If you want the indicator, I'll find the link in the description below with my discount code. So if you want my settings, let me quickly show you my settings because I know some of you want them. These are my settings. You can look at them. You can still pause the video. You'll find every detail of this indicator here. This is my settings here. You can fine tune your own settings to suit your trading style. So let's look at another example here. Let's move on to another chart, maybe on gold, because I know most of you like to trade gold. So basically in a ranging market, clearly on this example here, we can clearly see that we are ranging from here to this area here. So if you look closely on this area, focus on price action, you will see this very perfectly. We have a move to the upside, which is very strong from here to here. And then once we reach this area, you can see that this candlestick is a sign that the market is likely to push to the upside, because we have a bottom wick and a smaller wick to the upside. Even if, let's say, you entered around this area and then the following candlestick return like this, that means you'll be in a lucky trade, but it fully moved to the upside. This is the 5 minutes. You don't mind waiting only 10 minutes for your trade to be in profit. And sometimes the corrections might not even be clear. After this bullish engulfing candlestick, we can clearly see that we even filled this fair value gap here, and then the next candlestick even rejected from the upside, even the second one, but the third one that closed this fair value gap, it had a smaller wick from the upside, but the bottom wick is very big to the upside. That is why you see the market moving to the upside very strong. That's the only thing at least you can try to understand. So what I like to do during my backtesting, I just like to put some indicators and then backtest some other ranges, because it helped me to backtest very fast without wasting any of my time, because I don't have to draw more ranges in the market just to find a range. I just put the indicator and then leave it and then look inside this price area where the market is ranging, so that I don't want to waste my time. Okay, you can even look at this area here where we are ranging. We are ranging. So without wasting any of my time, I just put a line here and look at the current price action here. Different time frames will always tell you different price chart. If I look onto the, maybe let's say 50 minutes or 3 minutes, let's look, you'll see a different price action on this area. And we can clearly see that right now here, we are moving to the downside very strong. But when we move to the upside, we are very slow. So that means right now we might be in a correction. And this is a bigger correction from this one here. If we look closely, this is a bigger correction. The one that I told you that is very difficult to trade. So let's look at the lower time frame, maybe the 3 minutes. This is the 3 minutes time frame. And by looking at this price action chart, because we are looking to enter a sell, there is no way that we will be focusing on price action that is giving us a bullish trend. If we look closely on these two candlesticks here, we can see that we have a bearish candlestick, but this bearish candlestick here, they are closing with a wick at the bottom, except the last one here. If you look at this one here, this is a sign of a reversal. And I've been talking about this kind of candlesticks in the market that most people don't even realize that they can be on the same color, and even the indicators show me that the market is still ranging. So we have to look at this kind of behavior in the market. So if you want another video like this one, guys, please consider subscribing to the channel and leave a comment below. Here is another example on the Bitcoin daily time frame. We can clearly see that I have added another indicator, which is the head and shoulder scanner. Here you will see that we have a dashboard here and we have an active range here. And we can clearly see that we have BTC/USD active consolidation, even on the Ethereum, even the Apple stock market. And you can still change this to see other pairs that you trade in the market. Here you can clearly see that we have a lot of settings here that you can use eventually on a daily basis, that you can change everything to your liking. But for this example, we are going to use it on the Bitcoin. and look closely. When price breaks above this or below, you will see a buy or sell signals that will appear on a chart. So let's look closely. You can clearly see that we have an upward confirmation here. You can see we have a confirmation here to the upside. So that means that now we can look to enter the market because we are out of that range. So let's wait, and then we have a buy with a 1-to-1 risk to reward with a stop loss, take profit 2 and 3. And if the market doesn't give you 1-to-1 risk to reward, this will show you that we have a bad risk to reward. So you'll see that will appear on the market. So for now, if you want to enter the market, you can go long because right now we are at this stage. You can put your stop loss here or use some other technical analysis to enter the market, and eventually the market move to the upside. And you can change a lot of things in this dashboard here so that it can suit your trading style. That's the only way you can try to use this. So everything will be in the description below if you want to test this out. So yeah, I guess I'll see you on the next one.